Alright, guys, happy Sunday. How's everything going? So, this video is going to be for Group B, and without further ado, let's go straight to the video of today and the teachings for today. So, today I'm going to be maximizing about the premium and discount we discussed earlier on. I'm going to be, correlating it with market structure again and give more examples so this thing will stick inside very well. So remember I said, let me do a quick recap. Remember I said in this is the downtrend market, is a bearish market which we look for sells, while the uptrend market is a bullish market which we look for buys here, and we look for sells in this guy. So that's basically what I said. And if we are to spot our premium and discount level in a sell market, this is a sell market. It is giving you your swing high for the bearish trend. Then you wait for your swing low, you mark your two range lines there. You look for exactly where the 50% of the range is, somewhere around here. And this is your premium and this is your discounts. Remember I said that very well. So when it moves up to your premium, you look for other entries, be it a trend line confirmation, whatever confirmation or confluence you use, or be it an order block. You understand? You wait for confirmation, then you can go short. In your premium, when you go short, but if it just ranges in your discount and continues going down, you'll miss a trade. Does not mean you should have fear of missing out and keep on stacking trades down. It has missed your point of entry. It has missed your point of entry. The market is moving 24/7. You can catch another trade. And another and when you are you know talking about premium and discount in a bullish market, remember I said if the market is ranging upward, and let's say the market is ranging upward now, for instance, let's say the market is ranging upward, you look for your swing low, it gives you your swing high, then you look for exactly 50%. So remember, the up is still your premium and the lower part is your discount. So when it comes to your discount, you look for other confirmations. It might be a trend line confirmation, it might be an order block, whatever confluence you might want to be using. I've not started talking about confluences we'll be using in the group. We're still at the scratch and the beginning of talking about things and making us up about the major concepts about this market. Don't just jump into confluence when you don't even know what the basic things are. So when it comes to your discount, you can, go long or go short. So now I want to talk about something. I think break of market structure is in our syllabus for Group A, but I want to talk about this in Group B in a sense that, as a day trader, many people don't know how to look at all time frames are fractals. You guys need to understand that in all time frame are fractals. What do I mean by that? See something. This we all know this to be a break of market structure, right? This is your higher high, your higher high, your higher low, and thereabouts. And price has broken below the last higher low. So what do we call that? A break of market structure, right? Then this now can I give you an additional confluence to go short or to look for a sell. Am I correct? That's lovely. So now see something. We all need to understand that if, as a day trader, we all need to understand that if the price is bullish on the daily and it's bullish 4 hours and it's bullish 1 hour and it's bearish, let's say 15 minutes, 5 minutes, and 1 minute, we need to know that we want to trade according to what the higher time frame is telling us. So what I mean by example, I'll explain this thing once and give one example, so I'll be able to expatiate on it in the next video. I won't be doing a recap in the next video, so listen properly, open your ears very well. This is one of the major basics that allow me to blew me, I don't know, countless of accounts when I first started, because I didn't have knowledge about this thing. Now if I'm losing money to the market, I know it's based on my strategy or whatever, but it shouldn't be because of this mistake again. Listen very, very well. See something now. This is the daily time frame now, for instance. I'll give you chart example. This is the daily time frame, for instance, now. what do we have here? We have a bullish market, we have an uptrend. Now, if you probably like, let's say you zoom this guy now, or let's say, okay, let me use this guy. You zoom this guy, right? My for you zoom this guy now in the lower time frame, let's say 4 hours. This is daily. Okay, let's give it, let's write itself gonna, sorry. Okay, let's write it. Let's say this is the daily. Oh, sorry about that. Let's say this is the daily. This is the daily, right? This is the daily time frame. Now, let's say you zoom into the 4 hours. You will see something like this. Okay, let's say this is our circle. You see something like this. That exact top, this, remember this is the top I'm talking about. You will see something like this. Markets might give you something like this. You know, yeah, exactly, to give you something like that. Now remember, this is a higher high, this is a higher low. Pay attention. This is a higher high, this is a higher low, higher high, higher low. The market is strongly bullish, like no sign of bearish continuation here. So look at what our 4 hour is giving us now. Remember, is this slope we're looking at, this slope. This is the slope here. But in lower time frame, this is how it looks like. This is the higher high here. Higher high, higher high, higher low, higher low, higher low. See here now. It has given you a fake break of structure here now, because if you're looking at the 4 hour, fine. If you want to just trade, you know, do a very quick scalping and you are good at it, you can go to more lower time frame like 5 minutes and 15 minutes to look for confirmation for yourself. But if you want to follow the daily and the 4 hours, you have to understand time frame correlations very well. This guy break structure here. This is just a retracement. This is a retracement in a higher time frame. This is what we need to understand very well. So now it has started giving us something like, lower highs and lower low, lower low and lower highs. You need to understand that you have to look at the big picture and look at what the big picture is saying. So, for instance, now imagine we I still want to use that 4 hour example again. Imagine, okay, imagine we entered, for instance, the guy was, started sloping downwards. For in our mind as broken structure, we entered, okay, we entered a cell here. We entered the cell in this point here. This is where we entered the cell. Market is supposed to be going down. Then it gives us this expansion up again and take us out. We'll be like, what happened? We obeyed structure and all our confluence clicked, but you didn't look at the higher time frame confluence. It's something. Let me give one example in real chart. See something, for instance. This is a Euro US dollar 4 hour time frame. This is the daily time frame. All right. So we see something clearly here. This is a higher high, higher low, higher high, higher low, higher high, and price has not formed the higher low no yet. We don't know if we'll break out or not, but once we'll be following the trend. Look at what the 4 hours is saying. Okay, look at this chart very well. Look at it very well. Let's focus here. Let's focus on this guy here. Time frame 4 hours. Remember, okay, let me zoom out very well. Let you see. Look at the guy here I was talking about that we should look out for. Look at it here. So let me zoom in a little bit again for us to see. Look at that guy here. Look at it here. That thing that just look like a quick retracement in higher time frame. See, it looks this. This is our bullish trend. It looks like total break of structure here. See, this was where it broke structure. You can see. Then a downtrend. If you're an experienced trader, there would not be an issue for you catching this trade since that's broken structure and 4 hours. But if you're still learning, just stay out till the market correlates to what the daily time frame is saying. See, imagine you had entered a sell here. Look at this is a lower low, lower high, lower low, lower high, sorry, lower low, lower high. We always sell at every lower high at our premium. You understand? Imagine we are sold here now. We're expecting price to come lower then. See, just takes us out in this place here, then start rallying up very well. In the next video, I'm going to be expatiating on this very well, but I just want to bring it to our attention that when marking your premium and discount level, make sure you're not marking it and miss. You understand? Make sure you're marking it according to what the higher time frame is telling you. So you would not just mark and start marking up and like as if you're drawing cartoons on your chart, but make sure everything is correlating to the higher time frame. I'll be explaining on this very well in the next video, but let's just get this concept in our head. Premium and discount is a very basic, very basic and important topic in trading. Like seriously, like I said before, if you want to buy something that you get more value from it, you buy that then when it's at the discount price. And if you want to sell something, you make sure it's at its premium price, like the thing it will give you more money. So that's when you'll be able to sell to get more value from it. So basically, guys, if I was talking too fast, go back to the video and watch it again and ask questions. I cannot overemphasize on this asking of a question thing. So for now, cheers and God bless.